Well, good afternoon, everybody. I'm Ric Edelman. Thanks so much for joining us on this event. This is an urgent, exciting event now that we have the Ethereum ETFs just launched yesterday. And to help us understand what these are, how they work, why should you care, I'm very happy to bring onto the program Matt Hougan. He is the Chief Investment Officer of Bitwise Asset Management. Always a pleasure to chat with you, Matt. Thanks for joining us.
Thanks for having me, Rick. It is an exciting day.
And we're going to tag team Matt by inviting on Don Friedman as well. Don is the president of DACFP, the Digital Assets Council of Financial Professionals. And if Matt and I go back a ways, Don and Matt go back a really long ways as the two guys who helped build, create ETFs.com and Inside ETF. So 20, 30 years you two have been working together.
That is true. Don's a legend. It's good to see you, my friend.
Likewise, Matt.
And I'm going to tell you all a little bit of a little secret here. The reason I asked Don to join us on this webinar is because I'm at a hotel somewhere in Missouri, about an hour and a half west of St. Louis. I'm on a month-long road trip. I've logged 4,000 miles so far. On my way to Nashville, Matt, you'll be there, of course, at the Bitcoin 2024 event later this week. So my internet connection's unstable. So should it collapse again, it already has once, Don and Matt will continue the conversation while I try to get myself back logged on. Matt, while this is a really very exciting day, week for the crypto industry, there are still some folks I think who may not be terribly familiar with Bitwise. So do me a favor and share with us about Bitwise Asset Management.
Sure, absolutely. Thanks for the opportunity. Bitwise is a specialist crypto asset manager. Crypto is all that we do. And we've been doing it on behalf of investors across the US since 2017. We're well known today for running the world's largest crypto index fund, the Bitwise 10, as well as one of the largest Bitcoin ETFs, BITB, which has $2.7 billion in assets. And as of the end of day one, the second largest Ethereum ETF, ETHW, with over $200 million in assets, just behind BlackRock's offering. I think what distinguishes us is because we focus on this market 24/7, 365, because it's all that we do, because we've been through crypto bull markets and bear markets, we've seen a lot, and we pride ourselves on doing education. I was fortunate to write the CFA Institute's first ever guide to Bitcoin, blockchain, and crypto. Fortunate to partner with you on this kind of education. And the second thing is we focused on the advisor community. As we say, RIAs, institutions, hedge funds, and family offices, that's our native audience. We support that with, I believe, the only nationwide distribution team in crypto. So we are serving you. You're why we exist, to help you understand and gain exposure to this space. That's Bitwise in a nutshell.
And that's really impressive that you have so many dedicated team members who are doing nothing but serving the REA community. And you're right, Matt, it is unique in the marketplace. And I think a huge important role because let's face it, crypto's new. And for most advisors, it's something they're not very familiar with. So I'm really glad that you do that. And I'm really happy to be supporting Bitwise in your efforts. What I want to do is, of course, we're going to spend the overwhelming majority of our time here today talking about the new Ethereum ETF, but I want us to take a step backward, Matt, because I'm not sure that a lot of advisors and investors who are watching this understand the difference between Bitcoin and Ethereum. So before we can talk about the new Ethereum ETFs, we've got to understand why. And so frame it for us. Talk about the difference between Bitcoin and Ethereum.
Yeah, they're very different, right? They are very different. I think that's the first thing to emphasize. When people hear two cryptocurrencies, they imagine they're like the euro and the Swiss franc. They're just different flavors of the same type of pie. And these are more like different software companies. I like to say, Rick, every crypto asset is two things. It's an asset and a blockchain. The Bitcoin asset, the Bitcoin blockchain, the Ethereum asset, the Ethereum blockchain. And those blockchains are just pieces of software that can be optimized to be good at different things. Bitcoin as a software can't do much. It can just store wealth or send wealth. That's about it. But it's really good at those things. That's why people talk about Bitcoin as digital gold. Every decision the software makes is designed to make it extremely secure, extremely decentralized, censorship resistant. It's designed to make it the perfect version of digital gold, a monetary asset. Ethereum is like Bitcoin in certain ways. You can send it anywhere around the world, but it's programmable. You can program it using smart contracts. You can program an app to build on Ethereum and act like a bank, or act like a lending agent, or act like an art auction house, or act like a stock exchange. And what that means is Ethereum can do a lot more things than Bitcoin can. Now, it's not as secure, it's not as good at being digital gold, but it's better at being a technology platform. I raise that because when people ask, why should you invest in Ethereum? The answer is you're excited about the things that are being built on Ethereum. You're excited about tokenization. Most tokenization projects are built on Ethereum. You're excited about stablecoins. Most stablecoins are issued on Ethereum. You're excited about DeFi. The vast majority of DeFi activity is excited on Ethereum. Ethereum is the picks and shovels play to invest in DeFi, stablecoins, and tokenization. And it can ride alongside Bitcoin as an interesting investment in digital gold. So, to sum up,
So,
digital gold, technology.
so is a fair analogy that Ethereum is like the iPhone and the coin, the tokens, the apps. That's kind of like the apps in the App Store on the phone. Is that
I
fair?
think that's a great analogy. Another one that I've heard recently is Ethereum is like the Nvidia. Nvidia is to chatbots. ChatGPT is an app that is built on on Nvidia servers. There are different applications built on Ethereum servers as well. So whether you use that Nvidia AI or iPhone App Store, that's the core idea. It's that fundamental underpinning.
Yeah, I think it's that if then equation that is so important to Ethereum that when I send you my Bitcoin, you receive it. I mean, it's just dumb money, but I might not want you to receive it until you do something for me. Give me the deed to your house or concert tickets or only if it rains tomorrow or what have you. An if then contract between two parties. And that is, I think, the exciting element of Ethereum, that it allows us to program it, as you said, programmable money, that makes it applicable to virtually every industry on the planet. And I think that is the basis of the excitement here, no?
It's revolutionary to virtually every industry on the planet. I don't mean that in a theoretical level, Rick. I know we'll get into some of the applications, but I'll just give one example of how this changes the game. If you have stocks and you want to get a margin loan against those stocks, that could take you weeks or it could take you months. In a literal sense, I mean this very literally, we could start with a crypto wallet that had some Ethereum in it and get a margin loan against it within the next 2 minutes using Aave. When people talk about why this stuff matters, imagine something that takes weeks and lawyers and documentation on the one hand versus something that takes 2 minutes, 24/7, 365. You can set it up and unwind it. It's been working perfectly for years. It's a complete game changer for how finance will function in the future.
Rick or Matt, we get questions from advisors. If you could just give like a basic definition, like proof of work versus proof of stake. Can you kind of walk the audience through that?
Sure. Yeah, absolutely. So if you think about the core service that something like the Bitcoin blockchain provides, it processes transaction and secures people's wealth. It's the same service a bank provides. A bank processes transaction and secures people's wealth. For a bank, you pay fees. There's no bank in Bitcoin. So the people who process these transactions are called Bitcoin miners. And the way they do it is they buy expensive computer chips and they consume a lot of energy to solve math problems. And the winner, the one who wins that race to solve a math problem, gets to process this transaction and gets paid in new Bitcoin. That's called proof of work. And it's important that there's a cost associated with it because otherwise people would try to spam the network or fake the network, etc. So that's proof of work. Ethereum uses a different process called proof of stake. What's different in proof of stake is instead of buying these computer chips and spending all this money on energy, you just take Ethereum that you own and you put it up, you stake it and say, I'm going to act honestly. And if you catch me acting dishonestly, you can take my Ethereum. It achieves the same end. You can't fake the network. You can't scam the network, but it just does two different things. But there's a couple big differences. One, Bitcoin consumes a lot of energy, right? A lot of energy goes into Bitcoin. Ethereum consumes 99% less energy. The second one is it's just slightly more efficient. So Ethereum's inflation rate is much lower than Bitcoin's inflation rate at the current level. It's less proven, but again, that's not what Ethereum is going for. Ethereum is going for utility. Bitcoin is going for security. So they're trade-offs, but they're two different approaches to the system.
Now, you mentioned, Matt, that's a really good answer. And in the course of it, you mentioned that if I own Ethereum, I stake it so that I'm demonstrating I'm not going to cheat the system, and it helps provide security for the blockchain. But there's another element to staking, isn't there? And that is a profit incentive. If I stake, I make a profit. Talk about how that works.
That is right. Yeah. Just like when you mine Bitcoin, you receive Bitcoin. If you stake your ETH, you can earn a yield in new ETH that's issued to you. It amounts to about 3.5% right now. That's available people who own ETH directly and stake it on an ongoing basis. And it's a great incentive to do it. It's why people do it. People wouldn't do it. I mean, some people would. Most people wouldn't do it out of the goodness of their heart, but they will do it if they can earn some extra ETH for ETH they were going to hold anyway.
And that was one of the concerns or objections people had about Bitcoin, is that Bitcoin was kind of like a growth stock. The only reason you buy it is that you think the price will rise, like a growth stock that doesn't pay dividends. Ethereum, theoretically, if you stake it, does, not theoretically, practically, if you stake it, it does pay essentially a dividend in the version format of more ETH. So that's another fundamental difference. Bitcoin doesn't provide income, Ethereum can. But that's a great segue into the ETF conversation, because this is one of the differences, isn't there, between buying Ethereum ETF versus buying Ethereum directly at an exchange like Coinbase. The ETFs are not engaging in staking, are they?
No, they are not. They're not staking on behalf of customers, and nor are the issuers staking themselves. The Ethereum is just sitting there in cold storage with a custodian.
And there's a regulatory reason for that. The SEC doesn't want you to do that. But you talk about it in the context of, is that good or bad for the investors?
Yeah, look, staking is a very important part of the Ethereum ecosystem, and I think eventually we'll have ETFs that stake. So, but it is a nascent and emerging industry, right? It's still a maturing space. And so there are still some risks associated with staking. I think for most investors who are looking to gain exposure to this asset, which is up 1,500% over the last 5 years, 1500, they're really concerned about locking in that 1,500% return. If they can add a 3% return, great. But if they can't add a 3% return, that's okay. They still have the 1,500% over the last 5 years. No guarantee you'll get that going forward. But I think most investors will be satisfied with just getting block exposure to ETH. In fact, we know they'll be satisfied because yesterday was, I think, the second largest ETF launch ever, at least in the top 5 when you look at the flows into these ETFs.
Isn't it also
I think.
Go ahead.
I think you're right about that, Matt. I think if all you're really interested in is that 2 or 3% yield, go buy a treasury.
That's right. I mean, I'll say here at Bitwise, a lot of people own ETH 3 ways. They own some ETH that just sits there for that price appreciation. They own some ETH that they stake because it's an interesting part of participating in the community. And then they own some ETH that they use in DeFi apps, right? And I think we'll see that here as well. Look, there'll be plenty of people who have ETH in their retirement account through an ETF like ETHW, and then own ETH directly and engage in DeFi through crypto wallets. I think you're going to see that. It's not either or. I think often it's going to be both.
Isn't it actually 2/3 of ETH is actually not staked?
I love that you brought that up, Don. That's exactly right. 2/3 of ETH, all of which is owned by crypto native people at this point, right? The ETF just launched yesterday. 2/3 of it is not staked. I think that goes to my broader point. Look, this is a early stage technology play. People are targeting very high returns. The 2 to 3%, as Rick said, a treasury-like yield. It's a nice bonus, but it's not the main course. The main course is available in these ETFs.
Some of you are typing in your questions in the Q&A box. Please continue to do that. We're going to tackle as many of them as we can in our conversation with Matt Hougan of Bitwise. So talk about this, Matt, from an investment advisor's perspective. Is there a role in a portfolio for Ethereum? And more broadly, should an investor own the Bitcoin ETF, the Ethereum ETF, or a combination of the two?
Yeah, well, to take that last question first, I think most people are just going to own both, right? We diversify our stocks, we diversify our bonds. We're probably going to diversify crypto, right? This is an early stage technology. These are the two leading assets, but we don't know exactly which one is going to be bigger or more important in the future. You don't have a crystal ball. You just know that Bitcoin, crypto, blockchain is going to be more important in 5 years than it is today. And you want to make that bet. If you want to make that bet, own them both. If you do a 2 parts Bitcoin to 1 part ETH ratio, you're about at market cap weights. That's pretty easy to remember. And then you can check the box and move on with the rest of your day and the other 95% of your portfolio. There'll, of course, be some people who want to make a particular investment in Bitcoin because they're worried about fiscal overspending and the fall of the dollar. There'll be other people who want to make a particular bet in Ethereum because they're really excited about tokenization or they're really excited about stablecoins and DeFi. Great. You now have tools to do it. But most people are just going to start with this like 2-to-1 ratio of owning both.
So that 2-to-1 ratio, Bitcoin is roughly 3 times the size of Ethereum in market cap, which is where you get the 2-to-1 ratio. Makes a lot of sense on a cap weighted basis. What about market weighted? What about equal weighted? 50-50 between the two. Is that something you think advisors should consider?
We've done that study as well. We have some equal weighted SMAs. I think that's a great approach too. That approach is saying these are 2 different markets. They're both multi-trillion-dollar markets. I just want to own them both. And I'll add something to that one, Rick, which is if you do that and you rebalance, historically, you get to harvest some of the lack of correlation. People talk about these 2 assets being very correlated. Right now, their correlation is about 0.75, which is lower than the correlation between large cap stocks and small cap stocks, right? They're less correlated than that, a little bit. So you do get a benefit if you own both and you rebalance because they go through different cycles, right? And so I think you'll see some investors do that as well.
I think that the availability of the ETFs makes all of this very exciting simply because we're not only familiar with ETFs in the advisory marketplace, we can logistically add them to our brokerage account along with all of our other ETFs and all the other asset classes and facilitate the rebalancing you're talking about, along with dollar cost averaging and tax loss harvesting and such. It allows us to access this asset class in a manner that we have not been able to do prior to yesterday with Ethereum and Bitcoin prior to January. And I think this is, my view is that this is going to draw a lot of advisors into the crypto marketplace who in the past have been sitting on the sidelines. Do you share that viewpoint? Are you seeing that in the data?
I 100% share that viewpoint. Bitwise has been serving the advisor audience, as I mentioned, for 7 years, mostly with private funds, OTCQX funds, funds that are a little bit difficult to access. And we had success. Before the Bitcoin ETF, we had built up about $1 billion in AUM, which was pretty great. But that was through 7 years. In the last 6 months, that's gone to now close to $4.5 billion to show you the level of demand. And that's because advisors are busy. It's one thing to fill out, private fund documents and do accreditation for 100 different customers. That is the stuff of nightmares for some advisors. Adding ETFs is something they do all the time. It's push button easy. And I should add, Rick, these ETFs are priced so low, like 20 basis points for both of Bitwise's Bitcoin and Ethereum ETFs. This is true institutional level pricing. You could be a multi-billion-dollar institution. You couldn't get a better deal than you can get in these ETFs. So it's easy and they're very competitively priced. And so that's why we're seeing the uptick from this community.
There are a couple of logistic questions that we're getting from folks watching this. So I want to run through these, rattle them through. They won't take long to answer, but they're pretty fundamental. First, How do the Ethereum ETFs custody their Ethereum? How do you
Great.
do it?
In the case of Bitwise, we hold it in 100% cold storage with Coinbase custody, which is a separate bankruptcy remote entity from Coinbase, the app, the largest crypto custodian in the world. And the assets never touch an exchange or hot wallet. They're always in cold storage 100% of the time.
In the Bitcoin ETFs, there is a function known as the surveillance partner. Does that function exist with the Ethereum ETFs? And explain what that surveillance partner function is.
Yeah, there was a in the race to approve a Bitcoin ETF, there was a question of how you surveil this market, and some of the exchanges entered into surveillance sharing agreements with Coinbase to try to satisfy the SEC's needs. As it turns out, what the SEC found was you didn't need to do that. They had surveillance via these via the futures markets. They could monitor the markets, and that's the condition under which these Ethereum ETFs were approved. It's the same condition under which the Bitcoin ETFs were approved, but there was this idea of surveillance sharing agreements that was experimented with, but ultimately determined not to be necessary. The existing market infrastructure was robust enough.
So you don't have a surveillance partner for Ethereum ETFs. You still do for the Bitcoin ETFs. Is that going to persist, or will you eliminate that requirement on that side?
So I would say that some of the Bitcoin some of the ETF applications had that in their exchange offering, and those relationships remain. They're across multiple crypto assets. So theoretically, it's covered. It just wasn't part of the legal argument for these Ethereum ETFs.
Got it. Also got this question. We know that there's been a big debate over the years as to whether or not digital assets are securities or not. The SEC has filed lawsuits against a variety of crypto innovators on this question. The SEC has said very clearly Bitcoin is not a security. They have one point said Ethereum is not a security, and then have more recently said they're not sure. They think maybe it's a security. Depends who you ask and what day you ask. And the CFTC has said that they think Ethereum is a commodity. The list goes on and on as to the uncertainty. Regardless of that question, is Ethereum a security or not? The Ethereum ETF, is that a security?
The ETF itself, it's regulated under the 1933 Act, so it fits within that setting. But the underlying commodity is a commodity.
And so I would put it in the same conversation as gold. Gold is not a security, but if you buy the gold ETF, you did buy a security. Right?
Yes. Yeah, that's exactly right. It's the same structure as the gold ETFs.
And the reason that this is important is that a related question from one of our attendees is, does the wash sale rule apply to the Ethereum ETFs?
Yeah, this is a complex question that there are different opinions, and I'm required to say I'm not a tax advisor. On the one hand, you have that it's wrapped in a security argument, which would argue against it. On the other hand, it's a grantor trust, which is a pass-through structure. So I see arguments on both sides. I would tell you to consult your tax advisor or ask Ric Edelman.
And what I would say, echoing Matt, I'm not a tax advisor, I would say that what I would do is take the more conservative tax route. I would assume the wash sale rule applies the way it does to securities, because ETFs at the end of the day are generally considered to be securities. But if you want to be more aggressive, make sure you have a good accountant to defend you when the time comes. That's basically, I think, what you'll discover. One of the other differences, and this is another question. We got some really smart questions from the audience today, which is demonstrating. I think the advisors are learning more and more about crypto every day, and they're demonstrating their knowledge here. One of the other differences between Bitcoin and Ethereum, Matt, that we didn't really talk about in great detail, is the quantity. Bitcoin's quantity is locked at 21 million. About 19,400,000 or so have been issued so far. They're being issued on a set schedule over the next 120 years or so. That's not true for Ethereum. Ethereum doesn't have a fixed number. Talk about how Ethereum works in terms of the number of coins and whether that number is rising or falling and what causes that to happen.
Yeah, it's a really great point. This is one of the strongest arguments in favor of Bitcoin. It has a known monetary policy that you can trust on, and it's been in place for 15 years, and it'll be in place for another 100. So it's a really powerful attribute. What makes it such a good monetary asset? Ethereum has theoretically unlimited issuance. It has an inflation rate, right, which is agreed on by the community, based on staking activity, which right now increases the amount of Ethereum by around 1% a year. But there's a flip side to that, which is when people use Ethereum-based apps, they have to pay a fee in ETH. And when they pay that fee, it's consumed by the network and removed from circulation. So that in fact, over the last year, the net issuance in ETH is basically zero. So you have about 1% new coming in, about 1% removed through use, netting out to zero. It creates interesting dynamics on both sides. On the one hand, it's what makes Bitcoin such a strong monetary asset and you can trust it. And Ethereum, you don't know what the inflation rate will be in the future because it's not fixed. On the other hand, Ethereum's inflation rate over the last year is roughly zero, which is lower than Bitcoin's, which was 1.7% and now is about 0.85% on an ongoing basis. So they are different assets, and it's a great question by the questioner.
There are just so many questions here that are coming in, so I'm going to try to tackle as many as we can. A big topic of conversation whenever we talk about Ethereum is Solana. So talk about what is Solana, how does it differ, and why are we talking about it in the first place in the conversation of Ethereum?
Yeah, sure, absolutely. So if you think of Ethereum as the leading programmable blockchain, its biggest weakness historically has been throughput. You can only do so many transactions. And if there was more demand to transact on it, the price to do a transaction spiked. And we've seen the price to do a single transaction on ETH go from a penny all the way up to $200 during some of the NFT crazes of 2020 and 2021. And obviously that's not sustainable. Ethereum is trying to solve that mostly through the use of layer 2 networks and advancements at the protocol layer to increase its throughput. You can kind of think of it, Rick, like trying to go from dial-up to broadband. Solana has taken a different approach, a different technical approach that is more centralized and involves more parallelization, such that the result is it has higher throughput at very low costs. And the trade-off it makes to achieve that is more centralization. I think of it a lot like any other tech battle, right? Blu-ray versus HD DVD, or BlackBerry versus iPhone, or Betamax versus VHS. Different approaches at solving the same problem, which is how do you get a high throughput blockchain? The reason we're talking about Solana is because it's risen to be a legitimate competitor of ETH. It's much smaller, right? It's much smaller. It's a fraction of the size, has a fraction of the usage, but it has a strong developer community. It has a lot of excitement around it. It's had very high returns, and I'm bullish on the asset. My long-term prediction is actually that they'll both succeed, but I don't have a huge amount of confidence in that. One could win or the other. For investors, the challenge is you can't get Solana in an ETF. Now you can get ETH in an ETF. So either you hold ETH for now and then add Solana when it comes, or you buy the ETH ETF and use a private fund to gain exposure to Solana. And I think those are probably both valid. We're not going to figure this out in the next 6 to 9 months. It's not going to be decided by then.
Don?
Matt, you mentioned layer 2. Can you explain to the audience what layer 2 is?
Yeah, the analogy I like to make, Don, is to a bar tab. Like when you go to the bar and you buy a drink, they don't immediately run your Visa card because there's a charge every time they run that Visa card. Instead, what they do is they write down your transactions when you get 1 drink or 2 drinks, or God forbid 3. And then at the end of the night, when you leave, they run your card in a single transaction. Layer 2 networks are the same. It's expensive and there's limited ability to record a transaction on the Ethereum layer 1 network. So layer 2s are like this parallel market where we can do transactions that are much easier. It's like writing them down on a piece of paper. They're less secure, but they're easier. And then every once in a while, we post it to the main blockchain. And you can have multiple layer 2 networks. So you can have lots of these bar tabs running. And the result is you get a lot of throughput in the blockchain, but you trade off some security. So I think that's the way to conceive of it.
And Solana, to be clear, is layer 1 or layer 2?
It's a layer 1. It uses, again, a different process of parallelization. And there's a trade-off there, which is it's more centralized and it's had some uptime issues, right? If you're trying to do everything in one place, sometimes it breaks, and that happens on Solana. But these are fast developing technologies. They're solving hard problems, but they're both making real progress.
So Bitcoin's layer 1, Ethereum is layer 1, Solana is layer 1. Rattle off 2 or 3 names that are layer 2s. Polygon?
Base, Arbitrum, Optimism. Polygon was a layer 2. It's sort of morphing into its own network. It's in a weird in-between space. But Base from Coinbase, which doesn't have a token, you can't invest in it. You can invest in Coinbase. It's probably the fastest growing of the layer 2 networks.
So you mentioned earlier a moment ago that, okay, you can buy the Ethereum ETF today, you can buy the Bitcoin ETF, but there is no Solana ETF. So there's no simple, easy way to buy at the moment. But there is one indirect way, and that's BITW. You have, and this is one of my favorite things about Bitwise, you created early on the first, and now I believe for a long time, the largest index fund, I'll call it, of crypto. It is the BITW holds the 10 largest digital assets, cap weighted. So elaborate on that, because in that one fund is Bitcoin, Ethereum, and Solana, and more.
Yeah, that's right. We were trying to create the easy button for crypto investors, right? Just own the market and let the world figure it out. Too many of us owned AOL or Ask Jeeves and missed Google. Why not just own them all? So that's what it does. The 10 largest crypto assets, we rebalance it, reconstitute every month. So if one asset emerges, it enters. When Solana came from nothing, it entered our index very early. If assets fade from view, they get kicked out of the index. The thing we're really proud about with BitW, Rick, is through the years, we've screened out a lot of assets that you would have thought would have gotten in, but they triggered some of our risk screens. So the Luna stablecoin, which collapsed $41 billion, was the 3rd largest asset for a while, but it never made it in our index because we flagged it in our risk screens as subject to exactly the kind of collapse that took it down. So we're very proud of the 7-year track record. The thing to recognize for investors is it's not an ETF. It's available in a ticker, BITW, but it trades like a closed-end funds at premiums or at discounts. Last I looked, it's at a high 20s discount. We've committed to converting it to an ETF when the SEC allows us, and we're making progress on that, but we don't know when or if that will occur. But I do think it's a great product. It's my largest single crypto holding.
And I will say this, since you can't, many investors regard BITW as an arbitrage play because of this discount. The fact that it is trading at a roughly 20%, we'll call it 20% discount, means you pay 80 cents for $1 worth of assets. And if it converts to ETF status, that discount immediately goes away and you have that immediate uptick. That represents a gain above and beyond the value of the coins within the fund itself. So many people argue that why should you buy Bitcoin and Ethereum, ETFs or otherwise, when you can buy BITW, which owns Bitcoin and Ethereum, with a discount. So I'll mention that because Matt won't. As he pointed out, no guarantee it'll ever become an ETF, no guarantee about the premiums and discounts. Discounts can get worse, not better. So, but FYI, many consider this arbitrage opportunity rather unique in the marketplace. One of our audience members, William, asked, why not, on the topic of BITW, Matt, why not liquidate, this is what he asked, why not liquidate my BITW and use it to buy the Bitcoin and Ethereum ETFs?
Yeah, investors can, and that's a choice every investor can make. We would love it if you stayed within the Bitwise family. We are crypto specialists, and we offer among the lowest cost Bitcoin and Ethereum ETFs. The trade-off you're making is you're realizing that discount, and you don't get the same level of diversification. But Bitwise is just providing products that help people access the opportunities in crypto in the most efficient vehicles we can. When we can, it's an ETF. With BitW, it can't be an ETF yet due to regulatory restrictions. And so everyone can make their choice, but some people will decide to do that, and that's fine with me.
A couple of other technical questions about the ETFs. One, are they available for use in IRAs?
Yes. Easy one. Yes.
Yeah, it's an ETF's an ETF. So, just like any other ETF. And taxation. How are these ETFs taxed?
Yeah, pretty much just like a traditional stock ETF. They're subject to long and short-term capital gains depending on your holding period. So straight down the middle.
James asks about auditing. What are the internal controls that you use for auditing of you, Bitwise, as well as the ETFs?
Yeah, we're proud that we've been audited by leading auditors over each of our 7 years. In the case of the ETFs, the auditors KPMG does an annual audit. We do an additional step, which I think is unique in the ETF ecosystem, which is that we publish the address at which we own these crypto assets. So not only do we have KPMG's audit, but you can go on any blockchain explorer and see for yourself that we hold exactly the Bitcoin or the Ethereum that we say we do on a daily basis. So those are among the level of assurances that we provide.
At the very top of this conversation, you talked about the differences between the buying Ethereum via the ETF versus buying Ethereum on an exchange. One of the things that we didn't highlight, which one of our attendees has asked a question about, is the effect of the fact that the ETF being a security is only tradable during market hours, while the coin itself, say a Coinbase, is tradable 24/7. Talk about the implications for investors in that regard.
Yeah, that's right. ETFs are just ETFs. So they trade from 9:30 to 4 p.m. Monday through Friday, except for on holidays. As a crypto native, that seems like very little, but that is what people are used to in their stocks and bonds. What that means is if, the ETF closes at 4 and the price of crypto goes up before 9:30, the ETF will gap up on the open to catch up with the price. We see this in all ETFs, Rick, as you know. If you have a Japanese equity ETF, the Japanese equity market isn't open while that is trading in the US, but it catches up with the market price. So this is a well-established procedure. But yeah, you don't get the 24/7, 365 trading. The flip side, ETFs have enormously low spreads, and it's a very efficient, low-cost way to trade and gain access to crypto. So there are some tremendous efficiencies and scale costs, particularly for retail investors looking to enter the space.
Is there
in fact,
Jeff? Oh, go ahead.
No, Don, go ahead.
Is there any talk of how with other stocks and ETFs there's after hours trading? Is that something in the future, or?
Yeah, there is after hours and pre-market trading. Actually, if you took the Ethereum ETFs, the first trades in ETH were at 4 a.m. tomorrow.
Okay.
So there is some after hours trading. I'm glad you called that out, Don.
Jeffrey asked a related question to what you had just said, Matt, about the spreads in the product. He asks, do you expect the ETF to trade close to the NAV, to the NAV?
Yeah, what we've seen in the Bitcoin ETFs is it trades spot on to the NAV within, a few basis points of premium and discount, depending on where the flows are going. And the spreads have been very small, mostly 1 penny. I think ETH was 2 pennies wide on its opening day, which is pretty phenomenal for a day one. The underlying markets are quite liquid. So yes, I expect them to trade tight to their net asset value and low spreads. That's less true for some of our competitors who have a different way of trading their ETFs and how they acquire Bitcoin and ETH than we do. They trade at slightly wider premiums and discounts. But for the Bitwise ETFs, we've seen very tight spreads.
What we haven't talked about yet, I guess this is my bad. We could probably have opened the conversation with this. So let's tackle it here. We are having this conversation on day 2 of the Ethereum ETFs. I mentioned that because we're going to be recording this. We are recording this. We'll be releasing this in the next several days for those who miss it live. But this is day 2. Day 1, yesterday was a historic day. As you said, Matt, it was the second most successful ETF launch day in history on a combined basis. These 8 Ethereum ETFs generated more asset flows than any other ETF launch in history, except for the Bitcoin ETFs this past January. Congratulations. Talk about where Bitwise fell in that track. There were 8 of these ETFs. Bitwise is one of the 8. And we're talking about some of the biggest asset managers in the country, BlackRock, Fidelity, Franklin Templeton, Invesco, along with Bitwise, are among the 8 players. Talk about the amount of flows that you received. How much money did Bitwise raise yesterday? And put that in a comparison to some of the others. I know you've got the data.
I appreciate that. It was a great day. We pulled in a little more than $200 million in assets into ETHW. We were just behind BlackRock, which did, I think, 240 or 260. We were the number 2 slot, so we were ahead of some giants like Fidelity and Invesco, great firms, Van Eck and Franklin, 21 shares. I think when people hear that, they're surprised, but there's a fundamental reason for that. If you think about an investor looking at this space, many of them are going to reach for the most familiar name. That was BlackRock. They were the number 1. They're the largest asset manager in the world. But many are going to reach for someone who's an expert in this space, who's been managing crypto assets for 7 years. You wouldn't hire your equity manager to manage your bond portfolio. Some people don't want to hire an everything manager to manage their crypto portfolio. They want an expert. So I think it makes sense that the rank was, the largest asset manager, and then maybe the one of the best known crypto specific asset managers. But we were really pleased with the reception from the community, and we've had great trading volume today, and hope to be in one of those top spots going forward.
Happy to say that I am among that $200 million that flowed into Bitwise yesterday. For all the reason you just said, having a crypto expert is not something that is readily available in the marketplace, and I think that that you represent the oil well as opposed to the football field. The analogy in the ETF world that is often applicable. Some companies are like a football field where they have a very big coverage but not very deep, as opposed to you, who has a very small footprint but goes down miles. And so I like the oil well approach that Bitwise offers in the world of crypto.
Well, thank you.
So what's next, Matt? We've now got the Bitcoin ETF, we've got the Ethereum ETF. If there's one thing you have told me over the years is that the ETF industry is really good at inventing ETFs. So what's next?
Yeah, well, first I'll say there's still work to do on these ETFs. So we still haven't had approvals at Morgan Stanley, at Wells Fargo, at Merrill, and there's some big unlocks coming in the second half of the year at those sorts of platforms. So I don't want to consider Bitcoin and ETH done, but you're right that the ETF innovation engine knows no end. I suspect that you'll see people launching more covered call-like strategies that generate income on these high-yielding assets. I suspect you'll see people looking at things like momentum. And we've already seen filings that blend these assets, or even filings that look beyond them to Solana. So you're going to see a lot of shots on goal. Look, from an ETF industry perspective, they're looking at Bitcoin and ETH as the most successful things the industry has ever done. 5,500 ETFs have launched, and these are 1 and 2. So of course, they're going to flood the zone with a million ideas. A few of them will be good. Many of them will be less good, and hopefully investors can figure out the difference.
In addition to having new products such as a Solana ETF or a whoever ETF, I think we're going to see some combinations, aren't we? We're going to see, because right now you're forcing investors to buy both. They got to buy the Bitcoin ETF and the Ethereum ETF and build an allocation. I know advisors are going to say, can you give me one that has both? So
yes.
Is Bitwise going to do that, do you suppose?
Yes. Yeah, we hope to. It makes all the sense in the world. Look, we're the leading crypto index fund provider. 2 assets isn't really an index, but it's a proto index, and it achieves that diversification benefit. So it's something we're looking at very, very aggressively right now.
Chris has asked, apparently he's not satisfied with the depth of our answers to date. So he asks point blank, will you discuss the pros and cons of the new Ethereum ETFs? So
Yeah, sure. The pro of the Ethereum ETF is you can buy access to Ethereum that's held with the highest quality custodians in the world, with insurance in place, that's traded professionally, that's audited by KPMG, and that gives you a simple tax form in a 1099 through a brokerage account for a fee of 20 basis points. That's the pro of owning ETF. It's maybe the cheapest and one of the most secure ways to gain exposure to Ethereum. Certainly one of the simplest. The con is that you can't stake it, you can't use it in a DeFi application, and you aren't holding it in a self-sovereign way in your own self-custody. And that's the argument for doing it in a crypto native fashion. I think people are, again, I think people are going to do both. I've told this story before, but if you go back, Don may remember this, to 2004 when the gold ETFs launched. There were all these worries about, will people just stop buying gold bars and coins and just buy the ETF? Actually, what happened is $100 billion flowed into the gold ETFs, and the number of people who bought gold bars and coins directly soared. It 5x'd. What the ETFs did is they pushed gold into the mainstream, and people bought them in both ways. You're going to see the same thing here. You're going to see a lot of money flow into these Ethereum ETFs, and you're going to see a lot more users holding ETH directly, staking, custodying it on their own wallets, and using it in DeFi applications. I don't mean to sound like Pollyanna, but it really is a rising tide. It's going to lift all boats on this one.
I'm getting warning that my internet connection's unstable. Don't be surprised if I disappear momentarily. One question that just came in from someone I think joined us late. What is the ticker symbol for the Bitwise Ethereum ETF?
I love that question. It's ETHW, ETHW is our Ethereum ETF.
And let's, while we're at it, we might as well cite the other ticker symbols. We've talked about BITW, which represents
the Crypto 10, the Bitwise 10 Crypto Index Fund. And there's also BITB, which is the Bitwise Bitcoin ETF. Again, one of the largest in that space. And then the last one I'd mention is BITQ, which is our Crypto Equity ETF. I recently wrote a CIO memo about how you can combine Bitcoin, Ethereum, and crypto equities to have a crypto sleeve that covers the whole basis. I think that's a pretty attractive idea. So BitB for Bitcoin, ETHW for Ethereum, BitQ for crypto companies, and then BitW is the crypto index fund product.
I'm glad you mentioned BitQ because William asked a question about that. You said earlier that Ethereum, or you referred to Ethereum as the picks and shovels approach compared to Bitcoin, but that phrase picks and shovels has often been associated with BitQ. So talk about the actual holdings of BitQ as opposed to say BitW.
Yeah, it's a different approach to picks and shovels. So what BitQ holds is companies that are building the infrastructure behind crypto. These are Bitcoin miners. They're companies like Coinbase. They're financial innovators like PayPal, which is moving into the stablecoin space. So these are equities that are using the capabilities or building on the capabilities of crypto. If you think about Ethereum, it's a technology platform on which their applications built, stablecoin applications, etc. They both tap into that same well. What I wrote in my CIO memo was you could do 60, 30, 10, 60% Bitcoin, 30% Ethereum, 10% crypto companies. And then you basically own the market cap weight of all the ways to invest into crypto. I think it's a pretty great starting point.
The this anonymous attendee has just asked a really interesting question. Are any of you shareholders of Bitwise, and is it possible to purchase interests in Bitwise? So rather than, that's kind of the ultimate pick and shovel approach, isn't it, Matt? Buying shares of Bitwise as opposed to shares of the ETFs. Yes, I'm an investor in Bitwise, have been since very early in Bitwise's history. Matt, you obviously have equity in the company as well, I'm sure.
Yes, indeed. That is right. Appreciate the interest and feel free to reach out, but we're a private company at this point.
It's flattering to be asked, isn't it, Matt?
It is indeed. Yeah, really deeply appreciate it. It's wonderful to hear.
You mentioned a moment ago the CIO memo that you wrote. You write a lot of these, like every week. Do you not talk about the CIO memos that you write, some of the topics you've covered in the past, and how people can subscribe to get them each week?
Yeah, every week I sit down and I write 500 to 700 words about what I think is the most important topic in crypto. I know there's a lot to read, so I try to keep it fairly short. But an example is that idea, how to build a crypto sleeve that gives exposure to the space. Before the Ethereum launched, I also wrote one on what I expected from a flows perspective and why. I wrote one on how it might impact the price. I wrote one on why you might consider Ethereum in the first place. If you go back, during the early parts of the summer, I was writing about the changing political landscape in Washington and what it meant for the crypto market. So it's supposed to be 500 words that keeps you up to date on crypto. You can go to bitwiseinvestments.com and to the insights section, and you can find my CIO memo and sign up. We promise we won't overwhelm you with email, just this one email a week to get the CIO memo.
And 500 words is just a couple of minute read, so it's easy to digest, unlike some of the other missives that I've seen in the industry. You mentioned that you recently wrote about the political environment. Well, lordy, has that changed in the last 72 hours? We knew what Joe Biden's attitude was about crypto, not good, not favorable. I'm not sure that we are as familiar with Kamala Harris's position on crypto. Do you have any views on her outlook and what her election might mean for the crypto community?
Yeah, I mean, to some extent, Rick, it's nowhere to go but up. If we're starting where we're starting from with the administrative state's position to crypto over the last 4 years has been overtly hostile. And I think we start to see that change this summer. There's a bipartisan bill that got 71 Democrats voting for it in the House of Representatives, but the White House was still fairly overtly anti-crypto. They vetoed a piece of crypto legislation that passed both houses of Congress. So I guess I would position myself as hopeful that Kamala's position would be more pro-growth and pro-industry and pro-fairness. But the truth is, we just don't know. There were reports on Twitter. She was chatting with Mark Cuban about crypto yesterday. That's a good sign that she's engaged and wants to learn. So I'm going to be hopefully, optimistic and wait to see what she has to say. But the reality is we just don't know at this point.
We do know that the reason that the Bitcoin and Ethereum ETFs exist from a political point of view is that Gary Gensler was forced into this. The SEC had been opposed to this. Grayscale had filed a lawsuit last year at about this time, and ultimately won that lawsuit last summer, which set the stage for the SEC's approval of the Bitcoin ETFs this past January, and now here this week for Ethereum. The underlying legal thesis for this, and where the SEC just didn't have any legitimacy in its viewpoint, was that futures for Bitcoin trade in the marketplace. And the simple attitude was, if you're allowing futures to trade, how can you not allow the spot to also trade? The court found that capricious and arbitrary and ruled that the SEC had to vacate its prior decision, and how here we are with both ETFs in existence. But Bitcoin and Ethereum are the only two digital assets that have futures trading, if I'm not mistaken, which means I don't see how the SEC could be pushed under Gary Gensler's leadership to say yes to any other digital asset getting an ETF. Do you read that differently?
No, I think you have that exactly right. I think those in the industry that are looking ahead are focused on that second half of the phrase under Gary Gensler's leadership. I think under the current administration, there really isn't a pathway forward for other crypto asset ETPs, but that could change, right? Things can change rapidly. So we will have to wait and see, Rick, but at least we can be hopeful.
Meaning that if Donald Trump is elected president, Gary Gensler would resign. So, and that's not a Gensler Trump thing. That's just protocol in Washington, that when you have a new president, the old regime gets out of the way and allows the new president to bring in their people. So in that scenario, we'd have a new SEC commissioner chair who would theoretically potentially be more supportive of crypto. And it's an open question as to whether that new successor to Gary Gensler would be as favorable under a President Harris administration. So we have to wait and see. To your point.
That's right. Yeah, we just don't know. We have to wait and see. But change would be good. I think is the view from the crypto industry.
And related to the comment I just made about futures, one of the attendees is asking about investing in the futures as opposed to the spot ETFs. Talk about your viewpoint there.
Yeah, and we run futures-based ETFs. The challenge with them, and they've been great access vehicles. They're up significantly since launch. The challenge is that the futures market can trade in contango, which means the futures price is higher than the spot price. And when that's the case, even for well-designed futures products, you just trail the market, not by a ton, but by a handful of percentage points a year. So my expectation is the vast majority of investors are going to end up in spot-based products because they're more efficient. They're what you see is what you get. And I think that's where most people are going to end up. Maybe there's some very specific use cases for futures, but I think it's fairly limited.
In case we didn't make it clear, because I just got this question, what is Trump's position on crypto? Trump has been overtly favorable to the crypto community. He actually accepts political contributions in Bitcoin, Ethereum, and other digital assets, the first major political candidate to do so, and has been championing crypto over the past several months. In fact, he'll be speaking at Bitcoin 2024 in Nashville later this week. So we know his position, and we know Biden's position. It is Kamala's position that is a little less certain for us in the marketplace. And one last question for you, Matt. The CIO memo that you mentioned, is that available only to RIAs, or can individual investors also download that as well?
Yeah, no, that's available to everyone. It's open and free for everyone. It's my thoughts every week. I have to sit down tomorrow and write one for next week. So we'll see what I come up with.
I look forward to that, as I do every week, to your memos. It's been tremendous information, Matt. Thank you so much. We have produced here at DACFP a spot Ethereum ETF toolkit for you, very similar to the Bitcoin ETF toolkit we released in January, which is a really nifty comparative chart allowing you to compare all 8 of these ETFs, and you'll see how Bitwise compares very favorably. I'll give you a preview right now. There's also a video on what is ETF, and episodes from my podcast where I talk about the Ethereum ETFs as well. All of that available to you for free, including the pricing of all 8 of these ETFs. We keep that as up to date as we possibly can for you. We're going to be doing another webinar in September on Bitcoin, Ethereum, or both with Chris Jensen of Franklin Templeton. I invite you to join us for that webinar. And if you really want to get your arms around all of this and demonstrate to your clients that you are knowledgeable about this, get your CBDA, become certified in blockchain and digital assets. This is listed in the FINRA database of professional designations, an online self-study course with a world-class faculty that covers not just the tech, but also practice management, the investment thesis, portfolio construction, regulation, taxation, operations, and compliance, and how to talk about this with your clients as well. We have different courses, basic and advanced, for financial advisors, back office professionals, as well as individual investors. We even have a foreign language program available in 9 languages because we have folks from 37 countries who have gone through our course. And you can save 25% right now when you enroll in this. Just use code ETH25 because Ethereum, after all, is 25% of the market cap. So very clever on our part. And I invite you to listen to my daily podcast, wherever you download your podcast, The Truth About Your Future, where we cover crypto and a whole lot more. Matt, it's been a pleasure to be with you as always. Been terrific information. We encourage folks to go to bitwiseinvestments.com for more information. Matt and his team would be happy to help you learn more about these investment opportunities and understand the role they play in a diversified portfolio. Matt Hougan, CIO of Bitwise Asset Management, thanks so much for being with us on this webinar.
Thanks for having me, Rick and Don. Appreciate it.
Don, thank you so much. Been a big help. And amazingly, my internet survived. I'll see you both in Nashville in a couple of days. I've got another 1,000 miles to go.
Have a good day.
Bye-bye.
Bye.